All right, restarting the live stream. I think it should be better now. I like calling it an emergency live stream. Some pretty big pressure being put on price here. That's a lot of delta getting absorbed here. It's not unreasonable to think these lows could be coming quickly. Just carrying on from, I guess if people are watching this live stream, they might be confused. I'm looking for longs down here. You'll have to watch the last one. It crashed. I had to restart. Shorts aggressively closing, some longs opening, a little bit of a bearish divergence forming here in CBD and price. The more distance price covers down towards this 85, 84, 83K level, and the quicker it does it, the better for me. I'd like to just see, for this type of setup, I'd just like to see price come really quickly into this level. I like to just see it like, oh my god. Don't want it to get there like this so much. There's a conspiracy. Someone asked if this is capo. Maybe. We've never been seen in the same room together. Someone asking, have we found a bottom? Doesn't look like it to me, but get this loading as well. To click on it. I restarted ExoCharts. I think one of the reasons was I also had Binance running on here as well. I think I just had too much stuff running on ExoCharts, which is why the live stream was lagging and crashing. It's going to be crazy seeing what type of liquidations are down here. If you're new to this live stream, you'll have to watch the last one. I explained what I'm doing. I'm using risk management, looking to long a sweep of all these lows, willing to trade it aggressively. And if I get stopped out, then I get stopped out. All of these lows into maybe this trending structure. Quick clean tap would be nice. Some huge delta, V shape. We're trading back up at 100K by the New York Open. Just visualizing, manifesting. All right, so the kind of the low of interest to take is pegged right here, right at about 85,200. So tagging that low would be nice. There's a bit of a region down here though, but if we get the perfect trend line tag, it's like 84,600. There's probably a region all the way down to 81K. If there's no reaction here, no trigger for me. We'll look at order flow, and I'll be firing off some longs potentially here. Sorry, I won't be able to update everything probably for this type of setup, but in the Discord. There's lots of scenarios here though. It's just one, the quick run scenario. Any reaction here, I'll just take the long and have 1 hour risk in there. Looking for 85,000-ish. 84,700, and chasing the reaction if there is one at all. Might just be an instant stop loss. For something so exciting, it's kind of boring. Hey, oh, hey, Tim. How's it going? Hopefully things have been going well. You should stop by the Discord. I'll give you an honorary 1-month membership if you come say hello. Honorary OG. took a vote on the last live stream. People would prefer to see order flow rather than trading view on the screen. That's what we'll watch as we come into the lows. You know, it kind of would be exciting to break this down. I mean, this is kind of like, if we break this down, it's like, we're trading probably to 70, 66, 70K. Break that down, we're trading to 50K. We got Sailor underwater. I would like to see a bounce. I'd like to see 130K, 140K. I'd like to see Sailor go all in, re-leverage his profits into more Bitcoin, and then have an average entry of 75, 80K, and then a move down to 50K. I think ETH has some bullish scenarios here in play. Back towards all-time highs. If we hold all this up, if we bounce here, it's kind of standard fare for a major low. Break this down, not looking so good. I've talked about this like 20 times on live streams. We have 4 hours until the New York Open. I will say that if price doesn't keep just breaking down here like it is, and we start rallying back up towards these highs, I'm going to end the live stream and just plan to come back if we start breaking down or towards the New York Open. I'm only staying live here because we're quite close and price is just essentially going straight down, like 3% away from the major level. I've already explained for my trigger to long, it's literally just going to be price tapping the level and doing anything. I'll give a bit of a wider stop under 81K. Let that level play out. I explained in the last live stream. It's just one of those trades that it's either like the trigger itself, like you just put on the risk. It's like we either bounce here or we don't. And I know that people want to have some like definitive trigger, like, once you see this exact thing, then that's your long trigger. But there's just so many scenarios. But the scenario of the aggressive long, it's just like you take the low and then price just V shapes. You take the low, like that's the thesis of the long, right? It's something like this. It's just like price does this, and tomorrow we're trading back up at 100K. That's one scenario. You know what? I'll just talk about this again because why not? We're sitting here. I've covered this idea so many times. So let's just say like this happens, or this happens, or this happens. You're kind of just like, there's like 10 scenarios here that you're kind of in this trade regardless. But the benefit of taking the aggressive long, like just into like the quick move down into this level, tag the level and start reversing, is you are in the trade in the most bullish scenario as well. Like you might be like, oh, I could have waited and entered here, or I could have waited for this to form and then this, or this and this. It's like, okay, but you're kind of in that trade. There's so many triggers here, and why eliminate the the quickest, most bullish trigger, which is just the V shape, straight down, straight up. And there's, as far as triggers go into like trade setups like that, I mean, it's essentially you just either are in the long or you aren't. I mean, price has taken the level, it's reclaimed the level, and if you want to wait for the daily close or some other, another retest of the low, you're not in that trade ever. So, but there's always going to be people who say like, oh, if the trade works, it's just going to look like, how did you know? I already talked about this. And if it doesn't work, it's going to be like, why didn't you wait for XYZ? But those XYZs that they define would have literally never gotten you into a single one of these trades ever. The scenario you're trading, if you waited for that, you just would never be in any of these trades that where price ran the lows and V-shape recovered. So that's kind of my take on it. I'm not saying that there's not other ways to trade it, but that's why I would just trade the quick move into that kind of trending it. As soon as this isn't just instantly breaking down, I'm just firing off the trade. I already have the order ready to go, and I'm willing to hold it through a lot of this. And if I get stopped out, I get stopped out. Now, you could say things like, well, would you need to see like a lot of liquidations or like high volume or high delta? I mean, all these things have already happened. Whether price goes down another 2 or 3% or not, and you can just assume, without even looking at order flow, you're going to get more of the same. There's probably a lot of liquidations down here. You're going to have high volume, high delta. It's not even really a question. Someone says, what if we don't touch those levels and bounce? Well, then you're just looking for new setups, right? I mean, at some point, it's going to become evident that that's not as likely, and you're trying to find something else on strength. But, as far as like people, I think people want to know like your level of confidence, like in terms of putting on a lot of risk. I don't think that's a good way to look at it. It's just enough of a idea to put on some risk, but there's always going to be other trades, and there's no reason to take, I think, insane risk. If the bullish scenario plays out, I mean, there's still going to be opportunities to add to positions. Tim says, I sincerely hope the majority of people in here are in or at least considering joining ATF. These live streams are great, but are only the very tip of the iceberg when it comes to legacy chains. Appreciate that, Tim. Tim was a long-term, multi-year member in the Discord. He left us, but he's going to come back, and I'm going to give him a free month membership to come hang out in there. Just based on the question, Capo, I would say for you, 0 leverage. The question he asked is, how much leverage do you think is appropriate with such a wide stop loss? You have the question all backwards, right? It's irrelevant. Leverage, like the standard risk that most systems are trading is 1 to 2% of their trading account per position. Could be less, could be a little bit more, but that should be based on your own trading data. But your leverage has nothing to do with how much of your trading account you're risking, right? Like I see the stupidest posts about leverage. It's like I can't even believe the posts ever get posted. Just like, you know, I'm interested in trading this, nothing more, this, I'm quoting what like a post would look like, nothing more than 10 to 25x leverage. It's like, what? So nothing more than some arbitrary number of your trading account to the whole thing at risk. Leverage is just a tool, in my view, to, I mean, you can use it for anything. You could use a spoon to eat. You could use a spoon to do drugs. You could use a spoon to try to stab somebody in the eye. But leverage is a tool to reduce the amount of funds that you have at risk on an exchange, in my view. So, like for example, let's just say that you wanted to risk 1% of your trading account on this setup, and you're trading at something like this. You know, your stop losses, maybe it's 5% away, maybe you're even trading the tight variation 2% away, whatever it is. Let's just, for the sake of it, let's just say you put 2% risk on your position, 2.5% risk, and your stop loss is something like this. Let's just say 4%. But you don't want to put. So if you put half of your trading account into this trade and your stop loss gets hit, you lose 2% of your trading account. But maybe you don't want to put half of your net worth on, you know, some unregulated exchange because they can get hacked. I don't know. It's a crazy thought. They can rug pull. There's so many bad things that can happen. Maybe you don't want to put 100%. And so instead you put a little bit of your capital on the exchange. You just use leverage to size up to that position. And you're still only risking 2% of your account, right? That's the idea of leverage, in my view. Or that's the way that leverage should be used, in my view. I just think, you know, I just think that without some sort of assurances or guarantees, obviously for a lot of people, like if you're trading a small account and you have $100 and maybe it's even like a learning account, you don't really care, right? Like you might care if you lost your $100, but it's not the end of the world. And so you're not utilizing leverage in any way for that reason, and so you don't even need to use it. But I just have Yeah. I think it's something that, but if you have 50 grand, if you have 100 grand, if you have $5 million, $10 million, $20 million, like you want to trade 7-figure position sizes. I don't want to have 7 figures on these exchanges. There's no reason to. There's no reason to. It's just like, oh, you got hacked? All the money's gone? Great. I'd rather that hit being a little bit more, I'd rather it being easier to stomach. Okay, so just reading here in terms of Tony says risk is like 0.5%, and if it feels boring, that is the right spot. Yeah, generally it should feel a little bit boring. It should feel a little like you should always have this feeling when you're trading, like, oh, I wish. Uh, like when your trades work, you should kind of feel like, oh, I should have bet bigger. Like I should have put on some more risk. Oh, if only I. You should feel a little bit like that when your trade works. Like, why'd I just on that edge of maybe I'm making it a little too boring the size I'm trading. And then when you lose, you should feel like, oh, I don't give a shit. I trade this. I had 0.5% risk on. I don't care. I'll look for a new setup. Like that is the line you're trying to kind of thread with trading, I think, generally. And like there's been some members' testimonies over the last couple months where people hugely reduce the risk, like down to 0.5% per trade, or 1% per trade, 0.5%, and have 4, 5, 6, 7, 8x their trading accounts, trading just small risk positions, high risk reward, small risk positions, kind of easing up the burden of the position a little bit. Like, it doesn't really matter, it works or it doesn't, and just compounding those returns. That's typically how you should be trading. But so somebody says, but it's all shorthand, right? It's shorthand. Like somebody says, how much risk should I be using? It's like, I don't know. Show me your trading data. I don't have any. I just started today. Well, then the answer is probably zero. I mean, paper trade. Oh, I want to put something in the market. Well, then put $1 in. I don't know. I mean, how can anyone tell you? You've never traded before. You have no data. The answer is as close to zero as you can get, basically. For as far as risk, but as a beginner. Capo says, I get that I only risk 5% of my trading portfolio, but if you trade with 5% is a lot, by the way. Like just because your stop loss is 5% away doesn't mean you're risking 5% of your trading portfolio. You have to, like if you're trying to trade with 1% risk and your invalidation is 5% away, then 1/5 of your trading account is in that trade, and you're still risking 1%. You're adjusting your size. Like you can trade a stop loss 10% away with 1% risk. It's just 1/10 of your size is 1/10 of your trading account. And there's a whole mathematical reason to be doing this. I've made videos on it. It's just, again, I'm shorthanding. Everyone's exact situation is going to be different. But if you have zero data, your situation is as close to 0% risk as it could be. And if people say, like, could you risk 5%? It's like, yeah, you could risk 5% if your data suggests you could, but you don't have anything. So what's the point in even talking about it? But anyways, to answer your question, you said, I get that I only risk 5% of my trading portfolio. In brackets, I'll just say that's probably too high. But if you trade with 50x, you get liquidated before it even hits your stop loss. LOL. I am mainly trading with 3x leverage with such wide stop loss. There's something called cross margin. I'm not suggesting it. I don't think. Let's just put it this way: the best way to learn about it is not the hard way, and understanding that your entire trading account is cross margined against each other itself. The leverage doesn't matter, the size matters. So you can be trading you have a $100 trading account and you're at 100x, and your position size is $1 times 100x, and you're cross margined in that position, then you have a $100 position size on a $100 account with $1 margin multiplied by 100, and you're not getting liquidated by a 1% move. But again, these just aren't things. It's kind of like they're not things that you need to even utilize if you're not at the stage where you already understand them. It's kind of hard to explain, but it's not something like, oh, you need to teach a beginner how to do this, because they just don't need to use it. They're not really getting the benefit. And if they're a brand new trader and they are putting so much of their capital at risk on an exchange, then they're also kind of on the wrong track. So yeah, someone says leverage should not be used to inflate your trading capital. True. I mean, there's cases, right? There's cases where you're. I think a good case of this was it's like that famous trade that Druckenmiller and Soros put on, like where they broke the Bank of England or whatever. I think they leveraged up pretty high, because basically the whole thesis of their trade was like price couldn't move. There's a ton of liquidity and price couldn't move like 0.5% higher on their short. Like that invalidated the trade essentially, because just of how all the reasons of how it was structured. And so they could leverage and then quote unquote inflate their trading capital and put on more risk, or more size than they had trading capital, but their risk management was intact because it was such a tight setup. So there's going to be cases where you're scalping or you're trading tight setups, but they might be few and far between. Like this probably isn't one of them, and you're trading with a sub 1% invalidation, and you could justify trading a position size that's bigger than your trading account, and still be trading with 1% risk. Or if you're trading with 2% risk, you know that also can happen. Someone said, so the same guy that I said that 5% is too big says, I don't have a big trading portfolio, so I think that's fine, sir. You have to account how big your account is. You actually don't, right? Like, it's math. And that's why I think you should watch my video on the topic, because let's just say, like, whatever, it doesn't matter if you're, let's just talk about the best traders in the world, okay? And some of the best money managers. They want to make money, and they've made a lot. They've made billions. They made billions. And yes, there's limitations on how you can size trades and invalidate them and things just based on the size you're trading. But they're not doing some of the things they're doing because they don't care how much, they don't want to make a lot of money. There's just math. Like, think of it as percentages rather than size. Whether you're trading a $1,000 account, $10,000 account, or a $100,000 account, if you're trading a losing, if you have too much risk, and you're trading a losing game, where so the video I made just basically points out, let's say you have a 50% win rate. Your wins aren't going to alternate win, loss, win, loss, win, loss, win, loss. If you take 1,000 trades, you have a 99% chance of, a 7-trade loss streak, right? So if you're risking 10%, you have a 100% chance, 99.9% chance of a 70% drawdown. And it's just the idea of, you flip a coin 10 times, yeah, you're probably not going to land 10 heads in a row, but you flip it 2,000 times and you're going to get heads 10 times in a row fairly often. Just because of the sample size, you're going to have those outlier events with almost 100% certainty. So the reason that the risk management in that context is important is not because of how big your account is. It doesn't matter. It's the math. If your drawdowns are getting way too big, and even if mathematically you probably have decent odds of surviving at a 5% risk per trade, you have to also consider the psychological factors of getting into 100% guaranteed 50% drawdowns, 30%, 40%, and just how you're going to navigate those. Like if you really understand that, you know what, it's probably a certainty that I'm going to be dealing with a 30 to 40% drawdown at a minimum here at some point, and I just have to be prepared to navigate that. Then, sure. But you'd be surprised what you can do with small accounts. With limited risk, it just takes a little bit of time. There's a time and a place though, Capo. So I'd say it like this. I have no idea. Like, I don't know your exact situation. It's like, I don't know what your job is. I don't know how much capital you have available, what your trading account is, and all these different scenarios. It's likely, just statistically, that you're kind of in the learning phase. And I'll just say, like, in the learning phase, you're going to lose all of this money you're trading with. And you're going to lose it quickly at 5% per trade. Just statistically. I mean, unless you're some outlier, I'd say there's a 95 to 98% chance you lose it all. So you're going to learn some things while you do that, but like, I'm just telling you, 5% is a lot to risk, especially when you're at the stage where you're asking some of the questions you are, and there's truth to, like, hey, like, let's just say you take a 20-year experienced trader and you roll them back to, you know, $1,000 starting capital, and they have to rebuild everything. Are they going to look at taking on maybe more risk than they otherwise would have? Yeah, probably. Like you might just say, I mean, it's just the truth. Like, but the truth is, if you can actually think about those things, you don't need anyone to tell you, right? It's like you understand there's some chance that's not zero, and maybe not even worth not considering, that you're going to just blow up, but you just accept that risk, or have really, really significant drawdowns. And so, yeah, you might put on some more risk and be like, you know what, I'm going to just accept that, and I'll scale down my risk as I size up the account, because maybe it's like I need to live off this or whatever it is, right? But there's a ceiling to that decision process. Like, you can only scale up your risk so much. I'd say 5% on. Okay, I'm going to talk about this at a much higher level, just to get rid of the vagaries, right? Like, there's certain setups where 5% makes way more sense than other setups, right? 5% limits is a limiting factor, because the best way to think of it is like this. If you have the weighted coin that's 51%, 50% heads, it's guaranteed 51, 50, or 49, 51, 49, 51, 49. You want to bet on that coin. Somebody gives you that magic coin, you want to bet on it, but you can't risk 5%. That limits your ability to take that trade, right? That system, that trade, so it makes you less profitable, because you're just kind of blanket coding, like, the edge of with just a fixed percentage. So if I could have a bunch of coins, like, let's just say that, you know, I've gone around the world and I've acquired all these weighted coins, and one's 51, 49, one's 55, 45, whatever it is, and I have them all stacked up, but one of them I can flip 10 times a day, one I can flip 1 time a week, the other I can flip 4 times a year, and they all have different elements to them. I'm not just gonna say I risk 5% because I don't have. If I know I'm flipping the 51.49 coin, I want to flip it because I have an edge there, but I want to be careful how I'm sizing that, because I'm destroying the edge at 5%. I can't get out of the drawdown. that the drawdowns that I'm going to create. Too high risk of blowing up. So, the good thing is if you reduce your risk, you can actually just trade way more ideas, right? And realize the edge through. So that's something to consider. Not every trade with an edge has the same edge and probabilities and statistical chances of working and all of that. But that's like stuff you have to find in your own data, right? Like, it's the question of like how much should I be risking per trade. It's like, dude, no one can answer that for you. It depends. Let's look at your last 500 trades. Yeah, so Capo, you say my situation is 6-figure spot and 4 figures trading portfolio. Second cycle, but mostly buying BTC, ETH, spot, bear market, also stable income. Yes, I can trade with 5 figures, but I want to learn first. Yeah. I would go watch in the public Discord, the Absolute Alpha channel. Just go watch the risk management. That's the free Discord. You can go watch I think the video is called like how to turn $1,000 into 10 million in however many years or whatever the video is called. I'd just go watch that to understand the concept better. I would just say this: it's whether you're trading with 4 figures or you have 6 figures in spot or you're going to ramp up to 5 figures, like just understand that. Well, yeah. Whatever. Watch the video, see what you think. NG Comics says, lucky mate, I am breaking even on my trading portfolio. Trade, learn, trade, but on spot I am wrecked. No stop loss FOMO, no waiting for close above/below. Can't get over the fact that it might pump without me. Yeah, I mean, I'll just say this again. I've repeated this many times. For me, being in spot is just trading. I mean, you can maybe manage your trades differently with different high time frame thesis and spot, but it's still just trading, right? Like, structure matters. I mean, it's like if you, like you said, you FOMO the top, but you're like, I'm in spot. It's like, okay, well, price just went down 90% and it's sitting there for the next 5 years. So how does being in spot help mitigate that risk? But congratulations on being break even with your trading portfolio. A lot of people think that, they make the mistake when they're developing as a trader that being break even is like nothing, no progress, but it's not. Losing is the default, and losing quickly. Like, if you look at trader statistics, like new traders, it's something like, it's 90% plus of people that lose money with the best data we have available, but the majority lose a lot in their first month, 3 months, year. 70-80% of people quitting, losing money. Losing money is just like, if you have no experience, being steady at break even means that it's evidence of an edge, right? Like, your break even's not the default result for a trader. Break even is a progressed result. Just, no experience, no progress, is just steadily losing. Break even is the curve going up, and some of the adjustments that you have to make from break even to profitable can be relatively small to start ticking that to a steady increase, right, in your trading account. So congrats on that. But I guess I would say this, as far as like what you're saying is your spot results, it's no surprise, just because spot buying on leverage quote unquote trading, leverage, or spot, it's just all the same thing. All the same factors matter. It's the same charts. So it just sounds like what you're doing with spot is you don't care about structure. You're just buying whenever, FOMO, not thinking or caring about anything, and your results are really bad. You're getting absolutely wrecked. That's just literally not utilizing anything you know about anything to give yourself an edge, and you're just retail trading at that point. Yeah, Tim says break even is better than 97% of traders. Yeah, I mean, if you're, like you have a year result and the end comes out as break even, that's the sucky thing about trading, is that can feel like, oh my god, all that work and I achieved nothing. But that's just not true, right? That, I mean, like, you could call it cope, you could call it whatever you want, but it's like, it's just a fact. You're outperforming the vast majority, and you're you're making up for a huge deficit of what the majority of traders are doing, where you could say, like, if X percent, some high percent, 50, 60, 70% lost 50%, you could say that you're break even trading, you made 50% against the average result, right? So now your goal is to step up a little bit more and start printing 2% a month, start printing 5% a month. Like, you make these small adjustments to cross that threshold from break even to consistently profitable, and you're kind of right on that threshold of achieving that. Like, drawdown control is sort of evident in break even trading, right? Like, if you're consistently break even, it's like you've managed to protect yourself from essentially, like, and this is why it's kind of mathematically significant, is you've probably gone through some massive loss streaks at that point, after a considerable amount of time of trading at break even, and you've handled those well. Mr. G says, hey man, I really want to join, but the membership is like half my portfolio. Am I fucked? I already watched all your YouTube videos. Well, I am giving away a free membership every week, just to a random person. I mean, your odds are actually kind of good to a random person just who liked or retweeted something on Twitter. I'm just picking a random tweet each week, and most posts get like 100 likes, so that's a 50% chance of becoming a member. 150 likes over the course of a year. Might do some other giveaways. For me, I'm not trying to really gatekeep the membership for people who just can't afford it. I want to do some things but I think it's pretty important to have some kind of barrier of entry. Someone says the free section is absolute gold, so much alpha. I'd say this though, it's just whether you're it just depends where you're at with your trading, but whether you're a small portfolio or a big portfolio, or you're joining my Discord, or you're doing something else with your capital, if you're a new trader, your capital, the best investment of your capital is not going to be in your trading, right? Like, that's like it's just not going to be a good investment. Like, you're going to, I mean, so many people in over the years in the Discord, like, everyone's story is some version of, I put a bunch of money in crypto, either I made a lot and then lost it all, or I just lost it all, and I just kept doing these things for years and years and years and made no progress, and now I understand why. And many testimonies of people for the first time ever in their trading having a positive result over some extended period of time. Like, I've never consistently had profits over the course of 2, 3, 4 months, or whatever it is, and there's obviously crazy stories of people, you know, 10xing accounts and things like that. But the big thing is they're utilizing key principles and implementing them into their trading. I think that's invaluable. It's sort of like like I would just say it like this, like it's not that I want somebody to, like, they have, you know, $200 and that's their entire, you know, investment in crypto, and they're really excited about it, and maybe it can go to the moon, and maybe something they bought ends up going to the moon, and it's like, no, you should just spend that all on an LATF membership. Like, I don't want someone to feel like they're in that position, but what I would say is that it's probably, for 98% of outcomes, probably a better investment, and it's probably going to set you up for when you have more meaningful capital to trade, to make something of it. But, you know, it's just, yeah, I'll look at doing some more giveaways and things like that. Yeah, and you can. Someone says something I've learned is acquisition of skills is the most important. I mean, of course, like, you have to have some reasonable expectation that you're going to make money, and you know that 90% plus of people don't. So what separates you from them? But you know, you're gonna feel pretty. Although it's probably an illusion, anyways. Like, you see all these posts of people who are like, "Oh, I bought whatever coin when it released or whatever, and I had $100 in it, and if I'd held until now, it'd be $800,000." But it's like, and so, you know, you're gonna be in these situations where just anything you do, like, you're gonna have a coin, or and you're gonna, at some point, something you bought is gonna go way higher than when you sold it. And yeah, I don't know. I think most people are in crypto for the dream, and the dream is that you're gonna buy the thing's gonna go up 10,000%, and you're gonna hold it to the top. And it's really easy after you're out of that position to, in hindsight, see the chart that went up 11 million% and be like, oh, I would have held that to the top. But I would say this: basically, the simplest way to look at it is you're never going to be happy with any decision you make in hindsight if it's a compromise to what you want, right? Like, what you're really after. And even if the thing you're after is dumb, um, and you realize that down the road, you're still not going to be happy doing something that's not dumb. You, you want to really think about what you want and what you want to do and why you want to do it, and understand that there's pros and cons to every decision, every path. But it's like, this is what you're after, and you're all in on it, and you're gonna feel good about that decision. If that's not where you're at, you're just not gonna feel good about it. Um, you know, I might do some kind of, like, I might do some kind of draw too, where it's like, you know, everyone can enter who's says, I'll just have to take people's word for it, but if their trading account is, or their available trading capital, or whatever, however we want to phrase it, is under $1,000 or something, I'll give away like 5 memberships to those people, or just something like that. Uh, that's true, Tim. Yeah, Tim says everyone who has been through one cycle has fumbled 250K somehow. And yeah, I mean, you basically can't play. You can't have played around in this market for a few years, even with $1,000, $100, $500, and not done something that had you just done it a little bit differently. But that's all a fiction in your head, which is usually it's just, had I not ever sold that and just held it to the top, I would have made 250 grand. But again, it's just kind of an illusion. You're not allowed to ask. You're allowed to ask, but I'm not going to answer. Yeah, that's true. There's a lot of places where the average, I mean, like you said, the average yearly salary in Cambodia is $2,700. Hard to get over $1,000 with that. I would say that the LATF is really, really overpriced for certain regions of the world. Like it's essentially, I understand it's essentially impossible. To get in, and I don't really like that actually. It's 190. Someone's asking how much is it? It's $197 a month, $200 a month, or it's what is it? $1,700 a year. So basically, you get 3 months free at a year. So it probably works out. It's like $150 a month or something. Um, this is the kind of type of price action where one thing I will say about this. Sorry, Capo. So you asked rate of return, percentage, all that stuff. I will say this is it's kind of for the same reason. Like I really put off and like really didn't want to do something like I did this scalping video where I traded a $200 account to a $6,000 account in one day, and I recorded all the trades. It's like things like that. It's all kind of irrelevant. It's like it doesn't matter what I do because it doesn't. It's not like it just translates like that, right? Like you could take some of the best performing traders in the world, and just because you're around them doesn't mean you're going to become one too. What the only thing that matters to me, like I know there's a huge difference between being able to achieve something and being able to help other people achieve it. And the two, like when I first started the LATF, that was one thing that I just was so unsure of. I was just so unsure of if anyone would actually have a positive result because it's so different. It's so different doing something and doing the things that you need to do to help someone else achieve the thing. But so the only thing I really care about in terms of the LATF is other people's results, the results of members. And now at this point, I mean, I can proudly say I've had hundreds and hundreds and hundreds of testimonies, public DMs of people just having completely transformative experiences in their trading, becoming profitable for the first time in years and years, 5 years, 3 years, 7 years, 2 years, 1 year, just having complete breakthroughs. And a lot of those are available in the Discord if you want to read them. But I think that's all that matters. And I don't like to there's two things I don't like to do. I don't like to place expectations because there's no, for example, members in the Discord have such it's kind of interesting, such varying experiences and results, right? Like there's no, obviously there's a lot of content in there and lots of things that you can either take on and implement and practice and do or not. And then everybody has their kind of own baggage and their trading and all this stuff. There's a lot of factors, but people have really varying outcomes and experiences. But I'd say it's nine. I can honestly say I'd say, like, even if I'm being a little bit like or like down discounting the positivity, I'd say it's 98% positive feedback over the last 3 years. Like there's going to be members in this chat right now who've been members for years, months. There's going to be some people who joined a couple weeks ago that aren't so happy because none of my long setups work. Well, some of them actually printed okay, like 3-4R, but round tripped. But yeah. What was I saying? Oh, yeah, I think it's the only thing that matters. Like nobody would be happy. Like if all my reviews just said, I joined, literally learned nothing, or wasn't able to implement anything, didn't understand anything, made no progress in my trading. I've been a member for 6 months, and it's literally, there's just nothing here. Like, and then I'm like, oh yeah, look at this, look at my equity curve, get good. It's like, that's not what people are signing up for, right? So, anyways, there's other personal reasons why I don't want to share it. I think it's a little bit cringy and stupid for people in crypto to be like doing that, but the reason I don't think it's important to do is that reason. I've shared some stuff, like small sample stuff, and I've done like it's like that scalping thing or whatever, but I've shared some positions and things like that. But I don't think I think it's kind of like, there's a part of me, I try to play a little bit of 4D chess with the educational content, which is like, I think there's like a fine line between helping people and but helping them develop and helping them become good traders, right? Like where you handheld them too much and they aren't developing some of the personal things and skills they need to become profitable independent traders, because they just rely on you. Like they're completely lost without you, and that's not what I want to cultivate. Like I want to thread the line between being diligent with like clear, concise, diligent, trying to explain exactly what I'm doing and why and the concepts behind it and the reasons I'm taking this trade or taking that trade, without having what I'm doing being 100% of the time, 100% the only reason you do anything. And I think you have to kind of like, you got to push people out of the nest a little bit. Like they have to be in those situations to grow and develop as traders. So, it's a bit of a double-edged sword there. I think generally it's worked out well. Sometimes it's good to talk about a trade setup every day for 3 weeks and then disappear the moment it comes into play. Not every time, but sometimes it's not a bad thing to do. Where the fuck is Lucky? Oh, stream crashed. Nah, you're on your own. Stores, another longtime member, says, you have a talent for teaching, man. You're patient and can explain concepts so well. Yeah, I mean, I guess, there's probably some truth to like that. Like, if you really understand something, you should be able to explain it to a child. But I think some of these things probably go beyond the scope of being able to explain to a child. But generally speaking, like, you should just be able to explain things in a way that makes sense. But trading is complicated because there's a probabilistic environment. So it's like everything is an approximation of the thing that you're explaining. Like what do you look for in a long setup? It's like this or this or this or maybe this, and it could also look like this. But all those things might also be really bad depending on some of these things, unless there's also this. I mean, it's sort of like, but you're kind of explaining, like, it's not the question you're really trying to answer when you're taking a trade, right? Like, you're starting to go down the path of like what trades win and what trades lose. It's like some trades win, some trades lose, and you kind of have to approximate what you're looking for a little bit. Gerard says, joined in 2022, March 2022, and still here. He never lies. All I want to know is who he really is. I'm Capo. Capo's my alt. There's a little bit of yeah. I mean, I've talked about this. So someone says, LOL, Lucky is making his own opponents on the other side of the charts. Imagine the kind of guy you've got to be for doing that honestly and morally. There's a little bit of a thing, I've talked about it, which is like, I tweeted the other day, essentially someone launching a meme coin and rugging everybody, trying to like extract maximum value from unsuspecting victims. It is what trading is. I mean, it's like trading is, there's other people on the side of all of this, and it's sort of like if you put it into the context of a poker player, let's say a professional poker player playing with 5 newer poker players, and they're like, well, let's get together every night and play poker, and he'd be like, okay, and he knows he's gonna take all of their money, and that's the only way to win. That's what poker is. And they might be like, oh, I could win, and they're gonna win some hands, and he's gonna be like, oh, you got me on that one. That was nice, calling me down with that. You hit it. You knew you were gonna hit it. Like, people are gonna suck. Like, things are gonna happen. It's a game of probabilities. But he's sitting there knowing, I'm gonna take all of their money, and we're gonna play every night, and I'm just gonna keep playing this game with them because, and that's what trading is. If it doesn't matter, like right now, on Bitcoin, on any asset, there's people participating who are the suckers, and there's people participating who don't really care they're just trying to extract money out of the chart over time, right? And they're extracting it from the losing traders. Sometimes winning traders lose money, but it's just like the poker analogy, right? And it keeps everybody in the game, and they keep coming back every night and having fun. But as far as like the way I view the market, I don't think some of the core principles and edges that can be found in the market that have existed for the last 100 years are ever, without the market itself just fundamentally changing, are ever going to be gone. I don't think I can educate people to the point where it's like, oh, there's no more losing traders. There's just sort of like, it's kind of like there's a bit of a giving back sense in that, hey, I can tell you what I know and what I think, and I can tell you that I think you're going to lose money if you do this, and I think you have a better chance at making money if you do this, and these are the reasons why. Implementing these things, and it's like I'm not worried about diminishing my edge in the market. I think I'm going to. I think there's always going to be enough traders on the other side losing for me to scrape out an existence as a trader. But yeah, it's kind of an interesting dynamic because the truth is, I don't even want to know if I want to say especially in crypto. It's kind of like it's kind of like in the stock market or some other more, like you could say, established assets. You just have more sophisticated losers in a way. Like it's like they might know a lot more, but it's kind of the same thing. Here there's definitely more. There's probably more naive people, like because they're not trading, they're like in crypto in their heads, and yeah, maybe that makes sense. But yeah, it's kind of like my advice to anybody who's in crypto and slowly is, I'd say think long and hard about if you really want to become a trader, because it's not like the natural progression necessarily from, oh, I bought some crypto coins and I got rug pulled and I bought the top and now I'm going to become a trader. It's kind of like saying like, what would be the analogy? I'm trying to get from just doing something random to then, so now I'm becoming a doctor. Yeah, it'd be like, oh, I cut my arm and I couldn't find any band-aids and I wasn't sure what to put on it, and so now I'm becoming a surgeon. It's like, I don't know, maybe that's not a good analogy. But for all those who want to, I think it's hard to convince somebody that really wants to try not to try. But I think you can convince them to try very carefully, because there's just really good math that can be presented, really good kind of statistical analysis that can be presented, where it's like, this is why you should be really careful at the start. You got to have time to play around, to develop skills, because these are all the reasons why you're just probably going to lose all the money you start with anyways, and you can learn a lot of these lessons without doing that. Yeah, so Golden Shay says, wait. I'm way back here. Capo says, okay, so he says, thanks, learning a lot. Do you think it's possible to become a profitable trader in a year? Yes, it's possible. But that's typically not the standard timeline for most people. For most people, it's 3 to 5 years, 7 years. But it depends, right? Like, a lot of people waste years doing nothing. Like, they're not growing at all. They're not developing as a trader. They're learning a bunch of things, like, the hard way that don't work, and it's not, I would say it's not so easy to come across good information. It's like, it's kind of excusable a little bit why there are people that are just sort of like chasing this thing to this thing to this thing, and they're like, what the fuck? Like they're not learning anything that's helping them develop. Maxim says, so much value provided in there, and honestly the monthly sub was more than my trading port size for a while, and I wouldn't have had it any other way. Awesome. Mark says, my trading account is slowly bleeding. Any advice on how to turn it around at least to break even? Probably stop trading it. I don't know where you're at, but just I mean, there's just such a little amount of information I have, but the best advice would probably be to stop trading it and trade really small funds or paper trading. I know everybody hates paper trading, but I actually don't think it's a bad idea depending on where you're at in your trading, and develop some of those skills and then implement those things to build your capital back. Like it's not something you like can just do. This should be common sense, but I'm not saying you don't have common sense, but it's not something you can just do, right? Like okay, I'm a losing trader. What's the thing I can do? Go, and I'm gonna start trading and making my money back. You have to be a profitable trader, or you're just gonna keep bleeding out your trading account. And if you don't develop the things you need to do that, then you're just gonna keep bleeding it out. And the things you need to learn to do that probably will bleed your account out if you keep doing them with your trading account. So just stop trading your capital. The market's not going anywhere. Develop skills and then come back with your capital intact and get after it. It's kind of a hard question to answer. One thing I do have to say is I'm not a psychologist. Someone says, Lucky, how do you review trade effectively in psychology review, etc.? How to effectively and what skills required to spot my mistakes? It's obviously going to be a case by case basis, but I mean you have to just objectively. I mean, I would just say this: like there's something so simple about simple trade structures, like simple horizontal levels and something where you just say, my plan is when price comes to the lows of the range and takes the lows and reclaims them, I am longing. I'm putting my stop at or slightly below the next low, and I'm longing to the top of the range. When price goes to the top of the range, I'm shorting. I'm not saying that is every trade setup. I'm just saying, can you do that? That's your plan. And then try to do that. And after whatever happens, just ask, did I do that? Did I fall? I had this plan. Did I take the long, hold it to the top of the range, close the long, flip short, hold it to the bottom? And I don't care if the price, and when the range broke down, did I cut my long? And when the range broke out, did I cut my short? And that's it. And then try to do that. Like draw the lines on the chart. I mean, I'm just going to use this just because it's just the premise. Draw the lines on the chart. I am long. I'm taking profits. I am short. Until this goes one way or the other, and I'm cutting here and I'm sizing appropriately. Because you just learn a lot about yourself. Right? Like, it's just like you're in the middle of the range and you have the plan. Oh my God. I don't think we're going to bounce. I'm short. Price goes up. Oh my God. And you just start doing weird shit. And you start trying to think about, why am I doing all this weird shit? I don't care what happens. Do it with paper trading. Do it with $1. Whatever you have to do. Just do it over and over again. And just see if you can do it. Right? And then just figure out why you did or didn't do it. Like, what is going through your head? What are you afraid of? What are you thinking? To the point where, like, this is what I would say. The exercise isn't to win trades. You don't know if they're going to win. You don't have any data. You don't even know if it's a legitimate range. It's not the question. Identify a potential range, whatever it is, and just see if you can trade it as a range, which requires you to enter in at the lows of the range, to cut on a breakdown, and to take profits at the top of the range. That's it. And then like you say, like, what are the how do I analyze the psychological issues? Well, can you do that? Like, that's winning in this exercise is just doing that. Just do that. Even if you lose every trade, you've won. I took every trade. I stopped out every trade that lost, and I have no problem. But for most people, they're not going to be able to do it, and they're going to learn some things about themselves, about why they can't do it, what they're feeling, like what is stopping them. I took 2 losses. I didn't want to take the third one because I was afraid to take another loss. That one would have worked. It would have paid for the other 2 plus more, so on, so on, so on. Yeah, Maxim says, I think the stat is that most traders never even make it to year 3 of trading. Yeah, so most traders, he says 97%. I forget the stats, probably something like that. But most traders, like trading is just like a thing that people stumble into by accident a lot of time. Like most quote unquote crypto traders, they're just, they're not really traders. I mean, they're buying and selling or shorting and longing, but they're not like, the barrier of entry is just nothing, right? You just throw some money in and you're a trader. But most people will never trade long enough to even begin to learn the things they need to learn, and most people that do don't ever even make an attempt to learn the things they need to learn. So Golden Shady is just answering. It says also depends on the time you got to put in. A year can only learn only an hour a day or go full time. Yeah, there's just the truth that if you're spending 12 hours a day doing something, you're going to improve faster than if you spend 1 hour a day doing it, right? You have 5 hours a week versus 40 hours a week. Oh, sorry to hear that. Somebody says I lose my money, $80,000 or $800,000 in Bitcoin. Sad face. That's not good. Yes, I'm a full-time trader. Tony's saying, Lucky, please answer my question. I think I just did. I just was behind. Mr. G says, I just want to learn the skill to be able to make dollars without being tied to a place, a boss, a job. I'll just say this, for anyone wanting to become a trader to be free, like, oh, I have all this free time and like, there's some truth to it, but it's not like it shouldn't be your primary focus because it's so much harder than so many other things you could do. It's going to be a long time before you feel free. Like, and even when you could be, you won't be. There's just some truth to that. Like, yeah, you can do it from anywhere, you can live anywhere, but at the same time, it's sort of a meme to be like, oh, I'm a trader. That means like I'm just like sipping margaritas and I'm yachting around the world. It's like, no, you're working all day, every day. I mean, you can confine it, but at least for myself, it's like to get to where you need to be to succeed, you have to work extremely hard and dedicate a ton of time, and it takes a lot of work ethic, and you're not going to feel like, oh, I'm so free. How long have I been trading? I'll say over a decade, but I've been saying that for a while. It's kind of, you go through stages as a trader too. Like, there's going to be a lot of people who, it's like, when was the first time you put on your first trade? It might, oh, I spent 3 years like buying and spot holding crypto. And I'm not saying me, I'm just saying that people are going to have these different experiences. And looking back on it, you probably would have to segment like how much of that they actually spent pursuing trading seriously. Hey, if you had traded this range, you'd be printing. Now the question is, can you TP on a failed breakout and flip short? For anyone, I'm just kind of joking. This is the analogy I was just giving. But you could probably hold on a breakout. The next step of this live stream is going to be ending it and probably coming back at the New York Open. I'm gonna decide that may just be a members live stream. I'm not sure. There's just too many scenarios here with not breaking down where this is just a really prolonged range over the next few hours, and if we come back to this level, it's after New York. I like to trade around those major sessions. What would a crisp downtrend look like here? This looks kind of too clean. It looks too clean. It's not that low. Yeah, because I'm just gonna be too. I'd rather go do some other things. I'm gonna be too wiped out trying to sit live through to the New York Open in 3 hours. So come get some kind of SR flip, maybe retest the trend line. Might fade something. But just depends. Oh fuck. Shahid says we hit USDT key levels though. Why do you think lower? I'm just an idiot. I wasn't watching that. Yeah, I think you're talking about fib channels, Maxim. He says, have you played around with parallel channel GPs before? I was backtesting it other night and found price interacts with them often. Been a nice tool for the arsenal. Yeah, I think are you referring to like a fib channel? I certainly played around with them. I think fib channels are nice. All right, guys. I'm gonna try to come back either at the lows or maybe at the New York Open or something. Thanks, guys. Thanks for tuning in. Hope you are having a good day.